Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. We're taking a quick look here at Bitcoin, seeing what's going on. We're going to start with the weekly and work our way down, just kind of get perspective now that we're starting a new week here, what this kind of implies for us, and obviously take a look at some back-end high block capital data, just to ensure we can kind of see what else is going on. Quick little heads up, we are partnered now with Bitunix. Thank you again so much for no KYC, no VPN required exchange that is highly reliable and gives you fantastic benefits there when you register and trade with them. So again, please make sure to consider that. They are my favorite exchange here so far. I love Bitget, of course, don't get me wrong, you know this if you've seen my videos, but they do require KYC now, and unfortunately, if you're in the US, Canada, you're kind of stuck. And I hear also on the back end too that BingX might be requiring KYC, so we got to get ahead of the curve there. All right, so with Bitcoin, here's what's going on. First of all, to look at the Elliott Wave for the larger time frames, just kind of give you perspective here on things. It's important to recognize that we are potentially in our second wave here, upwards through this continuation. So if this is the highest point in which the price goes, which my speculation it is, 38,000 was a previous resistance level, still kind of is, we can see here that potential pullback here would be about right there, about 0.382, that 32,700 mark. Okay, so that does kind of reaffirm the 33,000 that I've been kind of considering for a while. If the price were to pull back to that level, that's kind of what we're going to be looking at. Again, that's just basically a 0.382 Fibonacci retracement level. 0.5 is also common. 0.5 would make sense too as well, 31,200, because we have a strong resistance level from before, right there at that point where the price waked up and couldn't pass it for some time. So just something to kind of think about there. We do have some previous liquidity and fair value gaps that have been filled. So we got this previous fair value gap here that's filled. We got a new one, of course, on the weekly, which has been here for a few weeks, obviously, but between 30,500 and 34,000 is that fair value there too. So it's common for those areas to be swept. Just know that November is typically a green month, so statistically speaking, we have less likelihood to hit that soon, but I think the next couple months between December and possibly February, there's a great chance we'll see the price pull back to that range. So just be mindful and or not surprised if that happens, because Bitcoin is overextended right now, okay? Above all four moving averages, nothing really to note there. TD sequential is the only stark reality here that we have a 9 on the weekly. So we've had 9 weeks of continuation to the upside. Typically, you're going to see some kind of pullback after that. As you can see in its history, though, Bitcoin does have a tendency of going a little bit further past a 9. So I wouldn't be surprised we see one more leg up or potentially a little bit further there. But generally speaking, you're supposed to see a pullback. We see 7s and 6s here consistently. This is our first 9 to the upside in a while. So my speculation is that we will see a pullback in the relative near future. Okay, so that's kind of where we're at there on the weekly. Let's talk about high block capital data here and see there's some new liquidation levels occurring, roughly at about 34,900 for longs, and some short liquidation levels, really tight ones here. Look at that. That is some aggressive liquidation levels. The reason why I say that is because those are probably the folks doing the 100 to 150x leverage. Really super tight at about 37,500. So kudos to you if you have the balls to do that. I prefer not to get liquidated time and time again, so that's just not my thing. But again, I hope that works out well for you. Take a look at shorts and longs. We did see a lot more longs get liquidated in the last 24 to 48 hours. So this weekend has not been a fantastic weekend for longs. Of course, what do you expect? Late longs at 37.5? Come on. Get real. Sorry, that's just my opinion. I do not like to be a late long or just anyways a breakout trader. I try not to do that and FOMO in. Anyways, take a look here at the longs. What we want to talk about is, generally speaking, the intensity of the longs here. So we got some late longs at 36,900. I'm not sure exactly why they taken longs at 36.9, but that is essentially where we're seeing the most amount of longs accumulated. And if we see shorts here, shorts are kind of across the board, all over the place, but right there between 36.8 and 36.9. So that is, again, a point of contention. So the important thing to note with open interest is that we have a strong accumulation at 36.9. That's either a support or resistance level that's developing because people are anticipating the price action going either above or below that level. Okay? Let's take a quick look at the last 12 hours and kind of see generally what we're looking at here for liquidation levels. It is also kind of all over the place. We got a heavy intensity of liquidation levels at about 40,400. That is a unique place to have liquidation level, but that just implies there's probably some 5 to 10x leverage traders out there. That's more my style. I'd much rather have a liquidation level up there than right here super tight and close to the price. We have a second most amount, about 38.1, which makes sense. And of course, we got about 35.5 and 36.3. So that just kind of gives us the range of motion there. In other words, all these liquidation levels are just above most recent highs and lows, which is sensible, and that's kind of the way that it should be. So truth is, it's not a bad situation at all here in that sense, but we are starting to see a lot more shorts entering the market than longs, because 2 or 3 days ago, shorts were nowhere to be seen when the price was ripping through 38, right? So again, keep that in mind. But at this point, looking at the daily, what we want to talk about is a couple of key factors here. What we want to look at is, I mean, we could look at Elliott Wave, honestly, but the daily time frame, I don't subscribe to this low of a price point. I do think 33,000 makes more sense. And once again, we see that 32.7 mark again. I think that's more realistic. But as low as 30,000, I don't think we're going to be seeing that in the near future. And that's just my personal opinion based on the amount of volume we have at higher price points. But generally speaking, there's not a lot of liquidation and fair value at this level either. If we take a look at the moving averages, we're still holding above the 20, but it is starting to slope sideways, which implies we're finally starting to see some sensibility in the market. In other words, the price is actually leveling itself out without continuously increasing. Okay, so truth is, with us being up over the 20-day SMA, that's going to provide us support initially. We want to pay attention to that and see what that looks like in the relative near future. But for right now, not really a big deal. Okay, so let's take a quick look at the big picture here. We can kind of see that we're swinging down here with the money flow index. Averaging price is coming down. Makes sense. We got a stochastic swing as well, kind of letting us know further downside would be logical. We've also got a MACD divergence here too. So we're really in a situation right now where we kind of got to recognize the proof here in the pudding, if you will, in that we are testing this ascending trend. We are bearish in a lot of different indicators so far on the larger time frames, more specifically on the daily. And I'm willing to bet the 4-hour time frame will give us a similar scenario here. So let's see here. So taking a look here, once again, money flow index is pretty low. We are maintaining above 50 on the RSI. That's actually a good sign. If we get below that level, we'd be losing some of these trend lines here, and then we'd be on the wrong side of the tracks. So just a note, on the 4-hour, we have officially lost the 20-day SMA. It's kind of the starting point of raising an eyebrow and being like, hey, is this coin actually shifting gears? We want to pay attention to that. Keep in mind, it could be a false positive too. It's dipped below that level before and returned fire quickly. So not saying that we're truly bearish just because we're below that, but if we get below the 50, that would be the cause for a little bit more concern. Okay, again, 50-day SMA and 50 on the RSI, those are two areas I pay attention to on the 4-hour. We're not there yet, so still okay. Is this fantastic? No, by no stretch is this a good thing, but it's not terrible either. We do still have an upper level of liquidity to be swept. A lot of liquidity at lower levels there, between 33.5 and 35.2. And if we take a look at TD sequential, we're kind of down to a 6 right now, so hypothetically we could see another half a day's trading worth of continuation of the downside. So maybe 12 more hours to the downside. Last but not least, Ichimoku Cloud on the hourly. We've officially broken below. This tells us if you have a short position open, you can leave it open, at least for the next 12 hours, because we have enough momentum to continue further down. So really, we got, I wouldn't say a lot of bearish signs, but a little bit more than the inverse, of course. So it would be probably best to anticipate the price coming down a little bit lower. We are establishing lower lows and lower highs on the hourly. While this isn't definitive, it is somewhat of a channel, and we got to kind of expect that to continue. So I'm speculating we're going to see a little bit more of a red day here today, and then kind of reevaluate later today or tomorrow, kind of see what's going on. So as per usual, we'll just go and check Bitcoin twice a day in the immediate foreseeable future, can make sure we can see what's going on and just help understand best practice. So I hope that you learned something here today. If you did, comment below, like, subscribe, follow. Greatly appreciate it. Be sure to check out our Bitunix partnership. And obviously, if you want to become a better trader, cryptocash.tech is a site as well. All right. Thanks again so much for your time. We'll see you in the next one. Have a great rest of your day.